You might think interest rates are just about mortgages, but they're quietly draining your wealth every single day. From your rent, to your investments, to your retirement account, interest rates decide how rich or how broke you'll be in the next few years. Let me show you how. To make this real, meet Greg. Greg is 28 years old. He sold his house in 2023 when prices and interest rates rose and decided to rent and invest his profits in the meantime. He puts money into his tax-free savings account every month and tells his friends that he's waiting for the housing market to crash. On paper, Greg sounds smart. But what he doesn't know is that interest rates are quietly draining his wealth 1 month at a time. Now, here's the first thing Greg doesn't realize. Interest rates don't just move randomly. They're a response to inflation, and it's much simpler than you think, and there will always be warning signs. Inflation is measured through the Consumer Price Index. It's calculated by taking a big basket of everyday things like food, housing, transportation, furniture, clothing, and seeing how much more expensive these things got over a specific period of time, usually per month. When inflation climbs, everything becomes more expensive. So to slow this, the Bank of Canada or the Federal Reserve in the United States will raise its interest rates. Why? Because higher interest rates make borrowing money more expensive, which then cools off spending. So lower spending equals lower demand, thus prices stabilize. Also because it has a proven track history. In the late 70s to early 80s, inflation exploded. The Bank of Canada raised its interest rates above inflation. It worked. Inflation dropped. But then mortgages and borrowing costs just crushed people. Now the bigger question is, which is outside the scope of this video, is what makes prices rise? So the short answer is usually government decisions. Even by doing nothing, that's a decision the government took. So here's your first warning sign. If inflation rises above interest rates, then pay attention, because in a healthy system, rates should sit just above inflation. But when rates rise, Greg is already hit twice. His grocery bill just jumped by $200 a month, and his landlord is preparing to raise rent because now his costs for owning the building have also increased. Greg thinks renting keeps him safe, but inflation's already eating away at his paycheck. Before we move on, I'd just like to mention that almost 99% of you are still not subscribed. If you like this video or this type of content, then please be sure to hit the like and subscribe button. It's truly the best way to help me out. I would really appreciate it, but it also helps to get this video out to others in need. So now let's talk about mortgages, which is the part that Greg thinks that he's avoiding. There's two main options for your terms: fixed payment, no change, very predictable, but you can't really get out of it. Or you can go variable, which follows the Bank of Canada or the Federal Reserve's rates. So how do you determine which rate to choose? Well, like I said, the first warning sign is when the report or news article is published that shows that inflation has increased. The good news is when these reports come out, they are very detailed, and the cause for the rising inflation is usually explained in depth. For example, let's say inflation rose to 3% this month while interest rates were still at 1%. This is when you need to find out the cause of the rising inflation, because that will give you more insight on how much more prices will increase, what is the solution, and how long will it take to be resolved. And then you ask yourself, in 3 to 5 years, will rates be higher or lower than they are today? This should give you a good idea as to what to expect for interest rates to come. If you've understood everything up to this point in this video, then the next part will sound like common sense. When it's time to choose a mortgage rate, whether you're renewing or buying, if the rates are already high, but inflation has cooled down, then don't commit long term. If rates are already high and inflation is still rising, then find out the cause. How long can you expect this to continue? And use your judgment. Aim to have your next renewal after this inflation period has cooled down and the rates have had time to decrease. Now, if rates are low in comparison with the last 10 years or so, then of course, lock it in for as long as possible. Don't overthink it. Now, Greg, well, in 2020, he didn't follow this. He took a variable mortgage rate at record low rates. By 2022, his payments, they doubled. Time went on and Greg did not pay attention to inflation and interest rate reports. That's the danger of ignoring inflation and interest signals. You're just gambling. Now, unfortunately, yes, global events matter. Take COVID, for example. The government shut down the economy, printed more money, returned it into the hands of consumers. Now there's more money in the economy chasing the same amount of goods and services, which equals more demand for those goods and services, which means prices rise. The first red flag was in March 2021, where inflation climbed to 2.2%, but the interest rates were just at 0.25%. The Bank of Canada waited a full year to react. So by March 2022, inflation hit 6.7%. And from that point on, rates began to explode to catch up. History always repeats itself. It's pattern recognition. But wait, what if you don't own a home yet? Well, you're not safe either, because when landlords' costs rise, rents follow. And that's why Greg's renewal came with a $300 increase. It's the same apartment, same walls, but higher rent. And what about the housing market? Well, interest rates have a huge impact on it as well. High rates means less buyers getting approved, which means less willingness to buy, which means sellers wait and prices stall. Now, when there's lower interest rates, that means more buyers and more bidding wars. Greg thought waiting for a crash was smart, but while he waits, he's paying more and more in rent while not building any equity, and homes just keep getting less affordable. Now, here's the part that almost nobody talks about, and that's your investments. When rates rise, businesses borrow less because it costs more to do so. So growth slows, stocks cool, bonds shift, even your TFSA or RRSP returns stall. If your portfolio made 5% and inflation ran at 6% for that same year, well, you just lost 1% purchasing power. When Greg sold his home in 2023, he didn't want to risk any capital since this will be the down payment on a future purchase. And he was thrilled to hear that banks were paying 5% on a tax-free savings account risk-free investment. He thought he was the smartest investor. Well, inflation was at 6% that year. So Greg, still thrilled to see his investment grew by 5%, but only to see that housing prices have increased by 6%. And it's all because Greg doesn't understand the correlation between inflation and interest rates. And when you don't understand the correlation between the two, that's the psychology trap. When rates rise, fear spreads faster than facts. Buyers wait for the perfect time, investors panic sell, and savers hoard cash in their bank accounts that only lose to inflation. But the wealthy, they don't freeze. They understand cycles. They buy when competition's low, they prepare before the rebounds. Greg, well, he froze. And he said, I'll wait until the rates drop. And while he waits, his rent continues to climb, his purchasing power shrinks, and opportunities constantly pass him by. The real danger is not about higher mortgage payments, it's about doing nothing while inflation and higher rates drain your wealth year after year. That's the psychology trap. Interest rates are not just a number on a chart, they're the hidden force shaping your rent, your mortgage, your investments, your entire financial future. Greg thought he was playing it safe by waiting, but every month that he waits, he's losing money that he'll never get back. Moral of the story, don't be like Greg. If you enjoyed this video, then please be sure to hit that like and subscribe button. I would truly appreciate it. And you'll be able to see my future uploads when they are posted. So thanks for watching, and I'll see you in the next one.